Greetings, dear traders. Welcome to the new week 14th, 18th of April 2025. As always, I'm Atomashi Dania, Global Market Analyst. Whichever part of the world you're joining us from, welcome. So let's get right onto it, starting with fundamental analysis. This week, we expect a few significant changes in the market, considering Donald Trump's tariffs wars, okay, back to back reciprocal tariff wars between different countries. China and the US have retaliated with tariffs, and it has affected the markets back to back, from the stocks world to indices to oil, all the way to Forex and cryptocurrency. Okay. Hence, within the course of the week, even though we do not expect any significant data from the US that could impact the market as strongly as, say, an interest rate report or the CPI data, okay, we should expect the ECB press conference and the main refinancing rate, which is expected to be released this week. Is the ECB week, ladies and gentlemen. Be on your toes, keep your fingers crossed, and look out for great opportunities across board. And as always, it's Trump administration, Trump regime. Don't forget, volatility is expected to skyrocket because of his comments. So always put that at the back of your mind, and remember to use low to moderate lot sizes. All right, and do proper risk management. All right, let's get on to it. So what do we have for today, Monday? For today, Monday, there is not a significant data expected across board. Maybe just the medium impact data where the FOMC member Wallace speaks, but that's not expected to impact the market significant enough to cause major peak movement. Hence, today we have paradise for technical traders. Beautiful day to trade the market as a technical trader today. Okay. On Tuesday, tomorrow, what do we have? We're looking at the GBP climate count change expected on Tuesday, tomorrow. That's significant. However, the pairs we're looking at this week are the Australian dollar USD, the AUD USD, the NZD USD, the USD JPY, okay, and the GBP JPY. Concerning these four pairs, all right, on Tuesday, there's no significant data that could impact these four major pairs. On Wednesday, what do we have? We have the British CPI, which is quite significant, but not expected to impact the Aussie and the Kiwi. Of course, we have the core retail sales and retail sales data on Wednesday. Okay, that should impact these four pairs mentioned across board. For the GBP JPY, the GBP CPI, 7 a.m. by West African time on Wednesday is expected to have significant impact. The GBP climate count change is also expected to have some significant impact tomorrow, early hours of the UK session. So be on the lookout for that. On the same Wednesday, we have the NZD, that's the Kiwi CPI data. Of course, CPI data across any major economy is significant. Be on the lookout for that. All right. On Thursday, employment change, unemployment rate, jobs data generally across board in Australia on Thursday. Early hours of the Aussie market, pay attention to that. That could impact the market. Okay. Especially considering the fact that um, the Aussie and the Kiwi economy in the past 1 month or say 2 months ago cut interest rates. Okay, the interest rate data is expected to impact CPI in the sense that it's expected that CPI, in an aim to target or combat global inflation, would reduce. Hence, the NZD, the Kiwi CPI data on Wednesday is very important. The jobs data as to how the small and medium, or rather even the large scale enterprises are interpreting the interest rate cut, and perhaps they're employing more people. All right, that data is very, very significant for the market on Thursday. Be on the lookout. And of course, the big guy, the monetary policy statement from Europe, the main refinancing rate. Be on the lookout for that. The expectations this week, maybe um, there could be, right, a rate cut. We don't know that yet. All right. Last time we had 2.65%. There was a rate cut of um, yeah, of about 35, 30 basis points. This week, perhaps we could have about 20 basis points. That's the expectation of economists cross board. If that happens, then pairs tied to the euro would have a major boost. You should buy the euro if a main rate cut happens. Hence, be on the lookout for that. And of course, unemployment claims, as always, from the US economy. The ECB press conference, I want to pay attention to that. You want to do that because the impact of data and discussions across the press conference could spread out from the Asian session or the end of the US session up until perhaps maybe even the US session for the next day. All right. So pay attention to that for Thursday. Okay. That's for that. And on Friday, it's the bank holiday. Perhaps I think it's Easter coming up. So bank holiday across major economies, the Swiss, the Euro, the UK, Canada, and so on and so forth. So it's definitely a technicals day, but volatility is not expected across board. Hence, my prediction is this. The largest volatility is going to take place from Monday to Thursday. Significant volatility is going to take place across board with the expectation that Friday is going to be a slow day. So many traders are going to be looking out for opportunities to target between Monday and Thursday. Hence, there could be some significant volatility within these days. Be on the lookout. All right, that's that for that. As always, next we're going to technical analysis. Let's see what the charts have got in store for us. Okay, we're going to be starting with the Kiwi, the NZD USD. What do we have? What do we have? Et voila. And look at this. This guy, beautiful as he is, has got reactions to strong support level right here. If I zoom that in, you see that price is currently at a strong support point of, which year is that? August 2022 and perhaps even March 2020. Yeah. So it hit that level last week. Okay. When it hit that level, we had something similar to a bullish engulfing pattern, but not quite. All right. A strong bullish price rejection. Very powerful price rejection right there. Swallowing the range of the previous week and right now heading for the 50-day moving average on the weekly chart. All right. But on the daily chart, we see positive divergence. This is a mistake right here. This should be positive divergence. We see positive divergence on the daily chart, indicating that the bullish outlook is still very strong in the market. We should be on the lookout for that. And right now, if you pay attention, you'd see that price has broken past a key order block level, an order block level, okay, of June 2024, April 2024, and October 2023, okay, which some will call significant support points, hence thereby buttressing the bullish outlook. If you've been with us on this channel, in the past 2 months, I've been singing and talking back to back. In fact, from the start of January, as to how pairs with the US dollar having been as counter currency are going to have a very strong bullish outlook. If you're a swing trader and you listen to my advice, you should be in some good profit by now. All right. January, February, March, ladies and gentlemen, the outlook on these pairs were bullish changes of character showing that the bullish outlook is going to be quite strong, or the bullish move is going to be quite strong. And we see that right now. Testament to this one single candle right here. Preparing, it was almost as if it was preparing to break the range for a long time. It just couldn't wait anymore. You know when you've been holding something back. Imagine you're holding P back. You hold your pee for so long, and when you get to the toilet, you just rush the whole thing out. That's exactly what happened right here. The pressure had been too much in the market, and traders could just not wait anymore, could not just wait, and just went up for the bullish moves. And that's what we have right here. Price looking to hit the 50-day MA on the weekly chart. All right. On the daily chart, we see positive divergence, also buttressing the bullish outlook. All right. Still on the daily chart, we see price moving conveniently within an ascending channel in a cyclic pattern within a range. Meanwhile, it has touched the 200-day moving average on the daily chart, indicating that there could be a reaction, maybe a brief pullback before a continuation to the upside, maybe a brief bearish pullback before a continuation to the upside. All right. Now let's look at the 4-hour chart or the 30 minutes chart to see what we have right there. Good. Now the 30 minutes chart tells us price moves nicely along an ascending channel, right? With the presence of negative divergence on the RSI, we see that just as I predicted on the daily chart, all right, a brief bearish pullback on this guy is imminent in reaction to the 200-day moving average on the daily, all right. After this, we could see a strong bullish run continuing the upside, all right, targeting possibly the 50-day MA on the weekly chart. Hence, what are my major support or resistance levels? Now, um, in within this channel, if I see a break of 0.5885 in the upside resistance, I consider a buy up to psychological level of 5900 and above that 5921. And coincidentally, 5921 coincides with the 50 MA on the weekly chart. Ladies and gentlemen, pay attention to that key level. If price happens to break past that on lower time frames, you want to target levels 5939 and above that psychological level of 5950. On the flip side, if it happens to break below the support border of the ascending channel, you never can say it's Trump administration, ladies and gentlemen. Trump could say something, China could do something, push the markets briefly bearish or strongly bearish, depending on what is released. But if it breaks the support border, okay, I'm looking at key level 0.5851 or 5850 psychological level. Below that, if price continues further, we could target levels 5837. Below that, 5828, which coincides with the 50 MA on the 30 minutes chart. If it goes below that, 5812, and below that, 5800 psychological level. Beyond that, 5780. What's my take on the Kiwi? I'm bullish in the long term. All right, bullish in the long term and bearish moving within the ascending channel I just drew for you on the chart. Okay, I favor bullish positions more on this guy. All right, so be on the lookout. Next, the Aussie. What do we see on the Aussie? The Australian dollar, of course, I told you it hit the major support border of October 2022. All right. And I said there's going to be a major reaction. And that's exactly what happened. Just like what happened on the Kiwi. We had price move very strongly above that support border, like a very clear price rejection in form of something similar to a railway track, but not a railway track. Okay. However, to get better visibility, we see price, okay, also react. Something happened in the market during the Trump China tariff wars that pushed the Aussie away from the ascending channel we saw last week or 2 weeks ago on this guy. And what happened? It became so strongly bearish. Price hit March 2008 support level. And as soon as it hit 2008 support level, let me show that to you right here. You see that yellow circle? That's March 2008. Now, what happened? When price hit that level, we saw strong price rejections in form of a morning star, okay, head back into the range of the channel. That's quite difficult to do. And it did that within a day, within a week, rather. That's crazy. So that's already testament to the bullish outlook. All right. Right now is back within the channel range. Hence, all right, my key levels are number one, if I see a break of key resistance level 6325, all right, I'll consider a buy, okay, to 6328. Above that, 6350. Beyond that, 6322, 6373. Above that, 6387. And if it goes so far, possibly 6400 psychological level, which will be very close to the resistance border of the channel. And if it goes beyond that, I'm looking at 6420, all right, on the resistance end. On the flip side, if the bearish pressure is powerful enough to break past the key order block level of 0.6294, then we could see price touch 6270, below that 6241, below that 6217, and below that 6198 or 6200 psychological level. That's that for the AUD USD. What's next? The yen, the USD JPY. Look, as always, as I said before, the outlook is strongly bearish on the USD JPY, and that's exactly what happened right here. Price hit major support level 141.85. If it goes strongly below that, we could see price touch for 140.50 and below that 139.49. Maybe perhaps the 200-day moving average on the weekly chart. However, let's not forget that price is moving steadily along an ascending channel and it's currently broken past the support border of the ascending channel after forming this very nice falling tree method right here. Okay, we highlighted that in the last weekly session, weekly outlook we had. Okay, we highlighted that very strongly right here. You can see the falling tree method. Okay, and then price broke past the support border, further pushing the bearish momentum. Okay, on the 4-hour chart, we had a descending channel. Price broke beyond that around March. Okay, broke above, came back, retested the resistance border. Okay, and just last week, it headed back down into the channel and touched the support border of the channel right here. As we can see, it's touched the support border. So what could it do right now? Okay, if price continues further to break below 142.00 psychological level, I consider a sell to 141.62, below that 141.01, below that 140.50, and below that 140.00. Okay, if price happens to be so bullish, it goes so far as to break past 144.00 psychological level, I consider key level 145.00, and that will coincide with the resistance border of the channel. Hence, a break of that could see price touch 145.27. Beyond that, 146.00 psychological level and 146.26. On scalping or intraday moves, beyond that, we could see price touch 146.74, and above that 147.00, 147.24 for the USD yen. Finally, last but not the least, the pound JPY. Ladies and gentlemen, now what do we see? As always, the outlook on this guy is always, most of the time, quite straightforward. And there's a key take here. Look, price moving nicely along an ascending channel on the weekly chart. Very clearly visible. Okay, price right now broke past the support border and is looking as though it wants to retest the support border of the channel. It formed a spinning top, indicating indecision within a range of the key resistance and support level manifested by the thick blue line and thick thin line, pink line right here, right here. If price breaks past key resistance level of 188.51, I consider levels 88.92. Beyond that, 189.32. Beyond that, 189.81. And perhaps above that, 190.00 psychological level, which would coincide with the support border of the channel. All right. And if price still pushes further on the bullish momentum, I consider levels 190.40. Above that, 191.02. And beyond that, 192.00 psychological level on resistance. On the support end of things, if the bearish momentum is so far as to break below the key other block level or significant support point, 186.16, at C price go touch 185.50, below that 185.00 psychological level, below that 184.440, below that 184.00 psychological level. If it's so far, the bearish outlook becomes so strong because of correlations from the yen. Okay, we could see this. Then price could go further into 183.02 psychological level or 182.00 psychological level. Now, my take on the Aussie is I'm bullish in the long term, okay, but I'm bearish moving within the range of the correlations from the NZD USD. That's the channel of the NZD USD. Because of correlation from both, I am strongly bullish. All right. And the major outlook right now, in the short term, I'm looking for bullish or bearish moves within the channel. A break above the channel would see me touch key resistance levels on the Aussie. I favor bullish moves more on the Aussie. Pay attention to that. For the USD JPY, of course, the outlook is bearish. Hence, I favor bearish outlook on this guy. All right. In the short term, I might be bullish in short moves, but majorly I favor bearish moves more on USD JPY. For the GBP JPY, because of strong correlations that's been happening between this guy and the USD yen in the past 2-3 months, I'm also strongly bearish. Okay, and because it's looking strongly bullish relative to the pound, in the short term, I'm bullish. targeting the support border of the resistance level, uh, um, the support border of the ascending channel, and after that, possibly looking out strong bearish moves going into the week. So that's that for the weekly outlook, ladies and gentlemen. It was great to have you. Again, I'm Atomashi Daniel. Very soon, we have our financial conference coming up. Kaduna, Kano, Katsina, be on the lookout. It's going to be as great as Abuja was. Okay, we're going to have a repeat and maybe even something much, much better. Pay attention, stay tuned, stay keyed to the website, and stay keyed to the Telegram or the WhatsApp channel for more. I wish you a great week. Remember, there are millions of traders in the world, and there are thousands of strategies. No one strategy is king. Don't be overconfident. The trend is your friend, and trade within the trend. Have a good one. Bye bye.